Sorry about that. Hello and welcome to another Help for Homeowners webinar session. I am Clemente Mejia and I supervise the foreclosure prevention program at the Department of Consumer and Business Affairs. This week we'll be discussing avoiding scams for first-time buyers. For many Americans, homeownership is one of life's most important milestones. From 2011 to 2019, one-third of homes sold in the United States were bought by first-time homebuyers. However, given the limitations brought on by the pandemic and market conditions, we are entering a new era of home buying. When the state and local governments issued the Safer at Home orders, the real estate market experienced a decline in activity. According to a survey by the National Association of Realtors, 28% of realtors in hard-hit cities saw fewer homes on the market. Nearly 40% of realtors reported open houses had been stopped, and almost half reported buyer interest had dropped because of the coronavirus fears. However, the decline in activity was short-lived. In the past few months, the home sales have surged. According to an article published by USA Today, home sales jumped 24.7% in July, which broke the record for a month-to-month sales spike set in June with 20.7%. Compared to sales in July of 2019, this year's sales rose by 8.7%. Even though there are less homes available to buy, sales continue to rise because of historically low interest rates, which means prospective buyers are looking to save hundreds of dollars off their mortgage payments. The home buying process is a daunting task, and ensuring you're getting yourself into something that is right for you is paramount. Also, scams are prevalent during economic downturns, and the DCBA, along with local housing counseling agencies, are working to proactively outreach and inform prospective home buyers about available resources and where they can go to receive legitimate help. Today, we have two experts who will tell us more about the home buying process and what to look out for when purchasing your first home.
I think we lost Clem there for a minute. So I think he was just going to do introductions. Here, to optimize your experience, keep the chat box open and look out for the symbol to open it. If you have any questions, press on that and you can enter your questions there. Our mission is to promote a fair and vibrant marketplace. We serve consumers, businesses, and communities through education, advocacy, and complaint resolution. Okay, so the agenda for today would be understanding credit, shopping and qualifying for a mortgage, finding your home and making an offer, and signing documents and closing escrow. And I'm going to pass it to Rosie. She's going to go ahead and start the presentation. Rosie? We can't hear you.
Yeah.
Okay, perfect.
Good afternoon. Perfect. Is this good?
Yes, we can hear you.
Wonderful. Thank you. Buenas tardes. My name is Rosie. I'm with New Economics for Women. I am the program manager for our homeownership program. I'm also one of the housing counselors at the homeownership program. Additionally, I am a HUD certified counselor. Next slide, please. to give you a little bit of background on who New Economics for Women is, we are a HUD-approved housing counseling agency. We offer a couple of services in addition to homeownership education. We also offer financial coaching, which means for those clients that are not yet mortgage ready, so they need a little bit of help in budgeting or getting their credit profiles ready to qualify for a loan, we also help them through navigate those barriers by doing credit coaching, again, financial coaching to get them to have the strongest profile possible. All of our services are 100% free, regardless of somebody's income level, gender. We are open and free to the community. We also offer life foreclosure prevention, given the current circumstances. We are currently prioritizing homeowners who have been impacted by COVID, and again, that is also a free service. I am proud to report that we are currently open, which means that we are providing phone and in-person appointments. Our Homebuyer Education seminars are done in person for free at our office, following very strict social distancing guidelines and trying to maintain a clean and safe environment. However, we understand the needs of the community given the digital divide, and therefore we're maintaining our commitment to the community to continue to do in-person services. Next slide, please. So in my role as a housing counselor, I will help my clients get ready to apply for a mortgage to be able to purchase a home, right? Unless you have $500,000 stashed at your house, you're gonna need to get approved for a mortgage. That being said, let's look at a couple of, let's look at the three main factors that lenders are gonna look at, right? So it's understood that you're gonna need a job. So you do need income in order to qualify, right? And it's not necessarily just about income. There's other factors and we'll tap into that. But most importantly, it's how much you make determines how much you're gonna buy, right? So if you make $35,000 a year, that's how much house you're gonna qualify for. You know, there is some down payment assistance programs that can pad your income a little bit to help you qualify for a little bit more. But the fact of the matter is that it's pretty black and white, right? Your income is going to determine how much loan you can qualify for, because that's how the bank assesses how much you can pay back, right? Savings. You absolutely need savings. Again, during today, we're going to talk a little bit about down payment assistance programs, which absolutely exist. However, it is not a substitute for your own funds. So you will need money for a couple of things. You're going to need money for down payment, depending on the loan product that you choose. It could be 20%, it could be 10%, 5%, 3%, 1%, 0%, right? But you are still going to need money for down payment. There is no such thing as a free house. That's ludicrous, okay? You're also going to need money for closing costs. And so what I always advise my clients is that when you're talking about mortgages, everything is done in a percentage, not necessarily a dollar amount. So your closing costs are always going to be calculated at 3% of the sales price. I don't care what an agent or a lender says, it's always going to be 3%. As a consumer, you want to budget for 3% of the sales price, okay? You may hear from a couple of folks in the industry say your closing costs can be paid by the sellers, right? Or we can, maybe build it into your rate or to your loan. No, you want to budget for 3%, because especially at a time like this where the market is so competitive, you don't want to be asking sellers to pay closing costs. So you want to budget for that, okay? Depending on the bank that you choose to go with, they may ask for reserves. So however much monthly mortgage you were approved for, on top of your money for your down payment and for your closing costs, you're also going to be expected to have 3 months or 6 months of however much your monthly mortgage payment is going to be set aside, okay? So it's very important that as you're shopping around for a mortgage, you understand, number one, what the down payment requirement is, how much the closing costs are going to be based on that 3% rule, and money for reserves if applicable, right? Credit. So credit is super important because credit determines for a mortgage how responsible you are about paying your bills, right? So credit history, do you pay your bills on time, right? And it's not just about making all your payments on time, but responsible credit use, meaning if I have an American Express, right, and I pay it on time every 5th of the month, I'm religious about my payments, but I'm consistently going over my total limit, then that does not help my case because I'm exceeding how much credit use I should be using. So credit history, your payments absolutely matter. Your track record, right? How do you pay, on time? Do you pay the minimum payment? Do you pay more than that? And also the amount of debt that you have is going to impact how much you qualify for. So, for example, if you have student loans, that is absolutely going to be counted against how much you're going to be able to qualify for. So as it relates to credit, it's not a black and white. So you can't say, well, I have a 700, do I qualify? There's other factors that you need to take into account. Like I said, how much money do you owe on your credit cards and all your debt altogether, right? Student loans, auto loans, personal loans. Are you paying back on time? How do you use your credit? Do you, max out your cards every month? Do you pay them off every month? So these are all things that lenders look at in order to determine how worthy of a borrower you're going to be. Okay, next slide. Thank you. Now, we always advocate for people who are thinking of purchasing a home to go through Homebuyer Education or through a housing counseling agency. There are tons of wonderful housing counseling educators or housing counseling agencies, rather. Within Los Angeles, there's MU, there's ELAC, there's NHS, and all of these agencies are really here to prepare you to be best positioned to purchase a home. And so you absolutely want to take this as the first step to purchasing a house, because we as housing counseling agencies don't really have skin in the game, right? We want to make sure that we educate you to do your home purchase in the most responsible way possible, meaning we have no financial interest in you. Whether you buy a house or not, it's irrelevant to us. It's our whole bread and butter is to make sure that we educate you to do it the right way. So why Homebuyer Education? Because as you'll see in this slide, I'm sure that many of us, right, have seen this through our neighborhoods, and I'm talking about the sign that says buy a house with 1% down, which is absolutely possible, right? Yes, I will repeat the agency names, and I'll also share a link for local housing counseling agencies in the chat box as soon as I'm done with the presentation for the sake of time. So these signs are posted all over our neighborhoods, right? And again, can you buy a house with 1% down? Yeah, maybe, but as a consumer, you should be able to look at these signs and say, okay, 1% down, but what's the rate? What kind of loan is this? Is this a conventional FHA, right? What's the mortgage insurance on this? So what we do at our boot camps, our Homebuyer Education boot camps, is we educate our clients to be able to understand, okay, yeah, it's a 1% down, but what are some of the costs associated with this loan? What kind of loan is this? Because those are that's the most important element of all of this, right? Because it's not so much how much you're going to put down, but how much is this loan really going to cost you, right? Because there are high cost loans out there, and we'll talk about that in just a second. Additionally, there are garbage people in the mortgage industry, and I say that with all respect to everybody involved in real estate. Real estate agents are also they're integral to your purchase. However, you have to be very careful about who you choose to work with as far as a real estate agent. I had a client who came to one of our boot camps, and she was super excited after she went to our workshop that she went back to the real estate agent that she was working with prior to coming to the boot camp, and she shared with him about the CRA programs that she had learned about. And because this gentleman really wasn't familiar with them, he elected to tell her that it varied and that one of his friends tried it, and then after 2 years, he went FHA. No, and we also covered this in our boot camp. FHAs are an option, but they shouldn't be your first option as a first-time buyer. There are other options for you that are probably more affordable. If we talk about FHAs candidly, FHAs really benefit real estate agents because they're easy to close, and just about anybody can qualify for an FHA mortgage because the standard is so low. So no, you absolutely do not want to fall victim to anybody who says that they're an industry professional. Educate yourself first so that you're able to counter this, those programs don't work, we tried it. No, you need to be able to, be armed with knowledge to be able to face, these challenges that are out there in the market. Next slide, please. Now, on that same note, if you are not quite credit ready, right, if you have some blemishes on your credit, you might come across this nonsense here. So this is one of the worst things for us in housing counseling, because this is a waste of money. We can do this. We don't. Well, number one, we can't fix your credit. You know, we can coach you on how to establish the right behaviors so that you can develop positive credit history and you can strengthen your credit score. But you can't really fix your credit. You have to engage in the right behaviors, right? So what I mean by that is that a lot of these folks who have bad credit, whether it be because they have collections or they, have paid their bills late, life happens and we understand those things. What will happen is that if you don't qualify for a loan, sometimes the real estate agent will tell you, I know somebody who does credit repair, or a loan officer can tell you, I know somebody who does credit repair. Be very careful with these credit repair agencies because they're very expensive. And what we have often seen is that the way that these folks fix your credit is that they will basically have you go into default, right? They'll go into your debts and they'll have you go into default so that they can negotiate the accounts, so that by the time, right before they're going to go over to collections, right, they're able to settle an amount, and now without you even knowing, you have late payments, right? You have blemished credit history. There's also a couple of other tricks that we have seen with folks who have paid these individuals thousands of dollars to do something that we as housing counselors or financial coaches can do for free, and you as a consumer can also do with the right coaching. So when you see this, again, don't pay for anyone to fix your credit. Go to a housing counseling agency. There's folks who do this all day, every day for free, and they can teach you how to also do this. Okay. Next slide, please. And Lucia, I believe that's you.
Perfect. Thank you, Rosie. On the next slide, finding a home. Where do you want to live? It's all about location, right? Ask yourself, do you want the city life or do you want a larger home with a yard? Do you want a short commute to your work, or are you willing to make an hour-long drive? What about access to public transportation? Is it important that you be close to public transportation to get to work or school? If you have children or plan to have children, the school district might be another factor to consider. Now, what type of home is best for you? Condominiums and townhomes may provide access to amenities like pools and fitness facilities, but might come with a monthly fee called Homeowners Association fee. If you find a home you like, you should also look into local ordinances. What is permitted and what is not permitted in that area? For example, what if in the future you wish to use the property for Airbnb? You should look into the local ordinances to see if it's permitted or not. You also have the right, you also want to hire a real estate agent, like Rosie had mentioned. Before you hire an agent, check to ensure that the agent is properly licensed by the California Department of Real Estate. You may also ask the agent for the names of past clients to check the references and compare to see who works best for you. You might come across an agent that represents both buyer and the seller. This is called a dual agent. To be a dual agent, the agent must have the consent of both parties in writing beforehand, and the agent has to become a neutral party representing both clients. Hiring this type of agent might not work for everyone. For example, as a buyer, you're going to want the lowest possible price, and I'm sure as a seller, you're going to want the highest possible price for that property. This can become a problem when buying a home. You need to look into all your options when hiring an agent. Next slide. Things to look out for when finding a home. If you find a home you like and it's listed as for sale by owner, you want to be cautious. The main benefit for the buyer in a for sale by owner transaction is to save money, but can turn out to be costly in the long run. The owner may not make all the necessary disclosures. They might not disclose issues with mold, the presence of any easements on the property, or certain repairs that have been done. In worst case scenario, you may not discover a problem until after you've owned the house for a while. If you make an offer on a for sale by owner, you want you want to set up an escrow account to hold the earnest money until the sale is closed. Do not give the money to the seller. If the sale falls through, you might have difficulty getting it back. Also, one of the steps in buying a home is to have a title search completed. It is like a background check on a home. A title search is performed to ensure that the title is clear and that there are no expected surprises such as judgments or liens. Hiring a professional home inspection service is something to consider as well. They could check the electrical, plumbing, and structural integrity on that property. You should contact local building and safety office to make sure any room additions have building permits. Ask your real estate agent for all disclosure statements that tell you the condition of the home. If the transaction includes certain fixtures or appliances, it is a good idea to check that they are functioning. If you're thinking about buying a house that has been foreclosed on, you might encounter some problems. If the property is still being occupied by the owners, it's often poorly maintained. Some owners might be bitter about the foreclosure and might take out their frustration on their home before the bank forecloses on it. They might remove appliances and fixtures or sometimes destroy the property. Along with unforeseen repairs, you might also be dealing with back taxes and liens. Short sales occur when the lender is willing to accept less for the property that is owed in a mortgage. Purchasing a short sale property is the same as a traditional purchase, but the contract will specify that the terms are subject to the lender's approval. A bank may take several months to respond to a short sale offer, so the process can take longer than a traditional purchase. Now, once you find your home, your lender will guide you through the lending process. I'm going to go ahead and hand it over to Rosie, and she'll go ahead and discuss the different types of mortgages. Next slide. Rosie? We can't hear you.
Conventional mortgages. Is that better?
Yes, perfect.
Okay, wonderful. Sorry about that. So you have a couple of options when it comes to mortgages. Your first is going to be your traditional conventional mortgage. Traditional conventional mortgages are offered by brokers, large depository institutions, Wells Fargo, B of A. Typically, these are your 20% down products, and they do require pretty high FICOs, FICOs over 700 in order for you to qualify. Okay, so that's traditional conventional, 20% down, and you want FICOs in about the 700s. Now you have your FHA. Typically, when you don't have the profile to meet a traditional conventional mortgage because you don't have 20% down or because you don't have a strong enough score, very, very common is it that you will find yourself in an FHA mortgage as a first-time buyer. And that's because FHA only requires 3.5% down or for the down payment. Now, FHA also has what's called mortgage insurance. And so that's a premium that you as a borrower are going to pay on the life of the loan because you came in with less than 20% down or because your credit score was less than desirable. You're basically considered a high-risk borrower. That mortgage insurance really eats at your affordability. On top of your monthly mortgage insurance that you're going to have once you close on the mortgage, you're going to have what's called upfront mortgage insurance, and that is a percentage of your loan that you're going to have to pay in advance. So to recap, on an FHA, you're going to have your down payment at 3.5%, your closing costs at 3%, plus your upfront mortgage insurance. If you cannot afford your upfront mortgage insurance, it's very common for lenders to finance that with your loan. So again, you're going to end up owing more to the bank because of the upfront mortgage insurance, and then your affordability is already decreased because you have this monthly mortgage insurance. Okay, CRA, and that's the product that we at NEW are really big advocates at because it's worked for so many of our families who don't fit the 20% down 700 FICO profile. So CRA is a mortgage that's offered by large depository institutions, again, your Wells Fargo, B of A, Citibank, and other banks, not just those, but it's an alternative to FHA because these programs are designed by each lender, so it's not a cookie-cutter program in order to promote home ownership. And yes, I can absolutely repeat the costs for FHA in just a second as soon as I'm done with CRA. Each bank designs their program as they see fit, right? So the down payment requirement could be anywhere from 0 to 5%. That's the most common that we see with the CRA programs that we work with in our office. And typically some of these CRA mortgages don't have monthly mortgage insurance or upfront mortgage insurance, which means that you're going to ultimately qualify for more house because you're not going to have those costs or those premiums, right? The underwriting is very flexible, similar to an FHA. It's done manual underwriting. So that means a human being is looking at your paperwork versus a computer, where it's automated underwriting. And that human being is the one that's going to determine whether you get the loan or not, based on a couple of factors. So CRA is a wonderful alternative to FHA, again, for folks who don't meet that 20% profile or maybe have somewhat, tarnished credit with, the right, if you pair yourself with the housing counseling agency, they can help you navigate some of the CRA mortgage products that are out there. And to recap, with FHA, you're going to have your 3.5% for your down payment, your 3% for your closing costs, your upfront mortgage insurance, UFMIP, that's standard on all FHA mortgages, and then you're going to have your monthly mortgage insurance that does not go towards principal, taxes, or insurance. That's just basically money that you're throwing away every month because the bank deems you as a high-risk borrower, and therefore they need to insure their investment. When you hear the term mortgage insurance, you hear like an insurance that's meant to cover you in the event that something happens. If you stop paying on your FHA mortgage, the bank still takes your house, and they still recover their losses through that monthly mortgage insurance, and you still lose the house. So I'm not a big fan of FHA. It's not a bad product. However, in this market, because we live in Los Angeles and it's a high-cost market, you absolutely want to stretch your dollar as much as possible, which is why we're big advocates for CRA. Moving on, you also have adjustable rate mortgages. So this is not a mortgage type so much as it is as a feature, right? So you have your 30-year fixed, which means that for the life of the loan, if you get a 3.5%, it's going to be 3.5% interest rate for 30 years on that loan, right? However, if you have a 30-year, if you have a mortgage, let's say a conventional mortgage with an adjustable rate, that means that the rate is going to adjust depending on how the loan is structured. It can change once every 7 years, once every 10 years. It really just depends on the lender. We do not recommend this for first-time buyers because you, as a first-time buyer, don't really understand the costs associated with home ownership. Typically, we would recommend an adjustable rate mortgage or an ARM for somebody who's either going to do an investment property, who's going to, maybe only sit on this house for about maybe 5 years and then sell it, right? Because there's not really an opportunity for you to build equity in the property. As a homeowner or as a first-time buyer, you absolutely want to build equity so that you could tap into it. So again, maybe not the best choice for a first-time buyer. Now, a second mortgage. Second mortgages are a little bit tricky because a second mortgage is something that you can get at the first time that you're buying a house, or as you are a homeowner, you can apply for a second mortgage based on the equity of your property. For the sake of time, I'm just going to be very brief and talk about it as a first-time buyer. As a first-time buyer, there are down payment assistance programs, and there are actually some that's offered through the city and through the county of Los Angeles. And one is the LIPA, the other one is the HOP, but these are second mortgages, meaning that this is not money that the city and the county is gifting you. This is a second loan that's going to be recorded on your property until you pay off that loan. So you're going to have your first loan, which is your first mortgage to your bank, whatever bank that may be, whether that's, say, for example, Citibank. And if you used one of these city or county programs, you're going to have a second mortgage recorded, and that's going to be the money that you owe to whatever entity you borrowed from in order to access that down payment assistance program, okay? Again, second mortgages, they're a little bit tricky because it's something that can happen at your first purchase, or once you become a homeowner, you can access the equity and pull out money from that equity as a second mortgage to, I've seen borrowers pull out second mortgages to buy another house, to do repairs, pay off debts, but again, they can be found at both times. And I have a question about adjustable rate mortgages. Yes, absolutely. Fixed rate mortgages are preferred as a first-time buyer because you want to have your costs fixed for the foreseeable future as you're navigating what it's like to be a homeowner. And then after the, we typically recommend that you kind of feel yourself out and not get into any major debt for at least the first 5 years of homeownership. That's typically the most expensive time. So yeah, we absolutely recommend fixed rate mortgages for all of our first-time buyers. Okay. I don't know if you, Leticia, if you want me to continue to address some of the questions in the chat, or if you want to move on so that we can address these at the end.
That's fine. If you want to go ahead and answer that question, I think, can you repeat
Sure.
those programs? Yes.
So to repeat, there are 2 programs that are local. That is the City of Los Angeles, LIPA, LIPA, Low Income Purchase Assistance Program. That is a good program to look into, but again, it's not free money, and there are some restrictions to those programs. You have to meet income eligibility. You have to understand that there's deed restrictions, so that means that you're going to be limited to what you can do with the property. And the other one is through the county, and that's HOP, Home Ownership Program. Same thing. Second mortgage, not free money, and there are deed restrictions with that. So if you want to look into those programs, I highly recommend that you pair yourself with a housing counseling agency. We did share the link for the HUD-approved agencies in Los Angeles. Any of those agencies would have knowledge of those programs and can help you apply for those, including us, NEW. Any programs offer HELOCs instead of second mortgage? Yes, again, you can absolutely access the equity in your property once you have it. So you could do a home equity line of credit post-closing, assuming that you have enough equity. And I don't want to get into the intricacies of that, right, because you have to be at a certain percentage of equity to access it. But again, we don't recommend for you to start tapping into your equity until a couple of years of you being into the property, because we want to make sure that you are okay with, that you are budgeting accordingly to your new expenses as a homeowner, especially, again, right now with times being so uncertain. I think those were the only 2, Leticia.
Awesome. Thank you. Next slide. Mortgage scams. When you are shopping for a mortgage, you want to be careful and avoid predatory lending. Predatory lending is any kind of financial lending that convinces a borrower to accept unfair terms through coercion and deception. You won't know if a lender is legitimate or predatory until you shop around and get quotes from several lenders. It's important to compare different loans and the cost of each. Things to look out for when you're shopping for a mortgage. Lenders that don't tell you about lower rate loans you may qualify for. You should contact 3 or more lenders and compare the terms of each loan. Some loans can come with a low interest rate and a balloon payoff. You may have to pay off that balance within 5 to 7 years. If you're unable to pay or refinance the loan, you run the risk of losing your home to foreclosure. You should also be careful of lenders that pressure you to act quickly without giving you time to think about the rate. A mortgage is a huge commitment. You should have as much time as you need to review your options. If a lender pressures you to take on a rate higher than you feel you want, it should raise a red flag. Also be careful, a legitimate lender will not ask you to lie on your application. Now, what if your credit is not the best? Some companies might advise you to get a straw buyer. Straw buying is another type of mortgage fraud. A straw buyer is a person who makes a purchase on behalf of another person. Straw buyer schemes involved a real estate agent who convinces a person with good credit to buy a home for someone with poor credit. The person they buy a home for can be a friend, a family member, or even a stranger. The person signing the loan often has no intention of living in the home or making payments on that home. The parties involved in this transaction collect their money while the straw buyer unknowingly assumes the mortgage. Because they are unaware of the death, the bank forecloses the property while the straw buyer loses their good credit. Think twice before you co-sign for someone else. If you co-sign, you are responsible for the entire debt. This means you will have to pay the full amount if the other person doesn't pay, even if you did not receive the goods or services. Next slide, please. Making an offer. Once you found the perfect home, you're going to want to make an offer. Your agent will draw up a purchase agreement to submit this to the seller's real estate agent. The offer will include the purchase price, terms and conditions, target closing date, provisions for certain fees, a deadline for them to accept or counter your offer, and any contingencies. If there is a counteroffer, you have the option to accept, reject, or counter it again. It's a good idea to make your purchase offer and sales contract contingent on obtaining financing and contingent upon a satisfactory inspection. This way, if you're unable to get a loan or if the inspection turns up with major repairs, you're not contractually required to buy the home. For deposits, avoid giving cash as a deposit or down payment. Instead, always use a check, money order, or cashier's check. Remember, if your offer is accepted and thus becomes a binding contract, failure to complete the purchase could affect the return of your deposit. Now, closing costs can be a surprising chunk of money. Closing fees typically can run between 3% and 6% of the purchase price. Don't be afraid to negotiate some of these fees. You have the right to negotiate with the seller if you have a preference as to the escrow and the title company that will be used in your transaction. For inspections, you should choose the home inspector yourself and plan to pay the inspector directly at the time of service. If during the inspection an issue comes up, it will be up to the buyer and seller to discuss how they want to handle it. For example, during the inspection, the inspector finds 3 electrical outlets that do not work. It will be up to the buyer and seller to decide how they want to move forward. The buyer might want to push for a reduction of the purchase price. If the purchase contract is contingent on a satisfactory inspection, you have the right to cancel the sale without penalty if you are not satisfied with the results of the inspection. Next slide, please. Watch out for the type of scams when you're making an offer. This is the final step for the closing documents. You want to be careful and verify who will be receiving your money. The FBI reported that scammers are taking advantage of home buyers during the closing process. The scammer poses as your real estate agent and convinces you to divert your closing costs to a fraudulent account. The scammer might use an email address or phone number that looks like the one your real estate agent or lender uses. These emails and texts can look authentic. The scammer might tell you that there is a last-minute change in their banking procedures and give you a different address to wire your money, which will usually go straight to their pockets. Once you initiate a wire transfer, it's very difficult to get your money back. So before wiring money, always confirm instructions with your trusted representatives. Beware of last-minute closing changes. Avoid clicking on any links or downloading attachments without first confirming with your trusted representatives. Do not email financial information and be mindful of phone conversations. Scammers may call and ask you to verify your personal or financial information. If something doesn't feel right, hang up the phone and contact one of your trusted parties on a phone number you know. You also want to look out for addendums. Addendums can include additional requirements from the buyers as well as the seller side. An addendum is essentially a stipulation to the purchase agreement. The stipulation can be as simple as making sure the necessary repairs are made or making sure that the appliances are left in the property. Do not make the mistake of signing a contract that you do not read. It is extremely important to read every page of the contract. Your signature means you understood and agreed to the terms of that contract. Now, buying a home can be very exciting and, as you can see, can be complex as well. As a buyer, you should do your homework. Be sure to read all the documents involved in that transaction and seek professional advice if you do not fully understand any aspect of your transaction. Next slide, please. In this slide, you have DCBA's contact information. If you have any concerns or questions regarding the process of buying a new home, you can always reach out to us. We can reach out to us. Our office is in LA. We have a satellite office located in Fremont as well. And I'm sorry, in Alhambra. Our phone number is 1-800-593-8222. And next slide. Next slide, we have Rosie's information for New Economics for Women. Rosie, if you want to add anything to your contact information. Okay, so yes.
No, that's perfect. That's our general line and email. So with any questions can be answered by myself or any of the staff members there.
Okay, perfect. So I guess now we'll open up to questions.
Thank you, Letty. So there are a couple of questions in the chat. So I'll go ahead and read the first one that I wrote down here. One question is how to find a reputable home inspection service or services. Maybe Rosie, any suggestions for that?
I mean, I would suggest to check references, and you can always look at Yelp, go online to see if there are any reviews for that company.
Correct. And one other thing I could suggest is that, a lot of times you may have a family member that is actually a contractor. Generally, a general contractor, sorry about that, would be able to help in these type of situations. For the most part, there's multiple areas that would be, required to look into, anything from roofing to foundation to electrical to plumbing. So there may be situations where you could find someone that specializes in one of those fields, or a general contractor can do those type of inspections and give you an opinion. Home inspection services is kind of like they do provide you a copy of that report. In the report, they're going to notate certain areas that they've seen that may require either additional inspections or that may need a repair. But again, that's just their part is to provide you with that report. Whether you hire someone or you negotiate some sort of repair agreement with the seller, then that's secondary. But again, just like Letty mentioned, anytime you're considering on hiring a home inspection service, you could go to the BBB, and there's the rating system there, and also the post complaints or any kind of issues that a company may have had. Also, things like Angie's List and all these other services that are out there now that you collect into a company. Okay, so there was another question, and I think this had to do with the list of HUD-approved counseling agencies. And the question was, is there any other list, or can we recommend a particular company? They've seen the list before, but not sure how to pick one. When it comes to HUD-approved counseling agencies, they go through a rigorous process on being HUD certified. And then on top of that, the counselors themselves are also HUD certified. So I think the best thing to do is, you could pick someone that may be in close proximity to you, and then you can start talking to them about your intent to look for a house to purchase. Also, you could call other organizations and do the same thing. Maybe Rosie has a couple more insights or recommendations on picking a company when it comes to buying a home. Anything, Rosie? Okay. We did receive a question in their Q&A from Monique Gutierrez. And the question here is, if you buy a piece of land, is it still considered first-time home buyer? So that's a tricky question because generally the term first-time home buyer means that there's a home on top of the land that you're buying. But I've heard of situations where either you're buying a piece of undeveloped land and there may be an agreement to build a to build a home on that land. And that can be very tricky in those type of situations. We do recommend and urge you to speak to someone that has experience in this type of area. So a lot of times this could be some sort of a developer that's trying to do this type of transaction. Land sales contracts can be tricky because they're not necessarily the same as a purchase where someone's giving you the deed to the property. So a land sales contract is basically a contract to buy the piece of land with a specific structure on it, and you make monthly payments, but you don't own it until everything's complete. So that could be pretty tricky, and I generally wouldn't advise that for a first-time home buyer. Let's see if there's additional questions here on the chat. Okay, so we receive. There was a question here from Paula Rodarte about asking about other states like Virginia. Good question. I'm not sure exactly what Virginia has to offer, but I could assume that they should have similar programs. I think every state has what's called a housing finance agency. So that's where state receives money from HUD to do certain type programs. So I would suggest doing a simple Google search for the state of Virginia to see if there's anything about first-time. I think also Paulo followed up with a question about military and service members. So the Veteran Affairs does offer some sort of program. So Letty, if you want. Program.
As far as VA goes, you should check with your VA advisors because there are different programs available for first-time home buyers, such as no money down. They help out with closing, the closing fees. So there are programs, and I suggest you just contact with your VA advisors to see what you might qualify for. Do we?
Okay. So there's another question here posted about when you have a pool, where to find rules, regulations for in the future sale home. Okay, so I'm not sure if I understand the question correctly, but if there's a pool on the property, I'm going to assume that the pool was permitted. If you have questions on whether or not a pool was permitted, you could check with your local building and safety office to confirm that. So in the county, it would be Public Works. If you're in the city of Los Angeles, the city has their own building and safety department. But you could do that before you even buy a home. So part of the presentation, they covered a section about making sure that the property has permits for certain structures. A lot of times you may run into a situation where there was add-ons done and those add-ons may not be legally permitted. So it's always a good, it's recommended to go to the building office and pulling permits for that property. Next question here is, how do I find about below market rate housing? This sounds more like a rental type question. So maybe if Rosie, do you have any suggestions on below market rate housing? You may want to try to
Can you hear me okay?
Anything. Yes.
Okay, wonderful. So below market, it doesn't exist. I'll be very honest as it relates to purchasing. If you're trying to purchase below market rate, you're talking about becoming a glorified renter because of the amount of subsidies that they're gonna put onto that property in order for it to be affordable to somebody who's very low income. So kind of similar to what Clemente said, there is below market rentals, but as it relates to purchasing, I'm not going to play with you that it doesn't exist. It is what it is. Again, if you want to be a glorified renter, you can ask me how, and I'll be happy to provide more information.
Okay, so we do have another question. Are there any presentations like this for refinancing? So at the moment, we do not have a recorded presentation, but this is definitely something that we could consider for one of our future webinars. So we'll make a note of that, that there is a demand for a presentation with refinancing. But for the most part, it will probably be more limited just on shopping around for a mortgage, and also the escrow process. I think everything else may be unnecessary, things like inspecting the home, although they're probably going to want to do an appraisal of the property, and that's similar to an inspection, but the difference here is that you live in your home, so you should have an idea what's there. When it comes to refinancing, the rates will be a little different depending on what you're trying to do. So generally, if you're trying to pull cash out, that interest might be a little higher. If you have multiple units on the property, so multifamily may also you may also find a higher interest rate. But again, I believe Letty suggested that you shop around and get different quotes from different lenders and trying to find what product is best for you. I think we still have time for a couple more questions. Let's see here. Do you recommend having a real estate agent versus trying to do the entire process yourself? Good question. Again, if it's a situation where you're a first-time home buyer, then we're just going to assume that you're unaware of the entire process. So if you're looking to do something on your own, then we strongly urge you to take Rosie's recommendation and speak to HUD-approved counseling agencies so they could at least walk you through the process and tell you what you qualify for, and loan products as well. I understand that agents do make a commission off of, helping you find your home. So I understand that. There are some disclaimers made in the purchase contracts and other agreements that you sign with an agent that frees them from certain type of liability. So things like property lines, boundaries, the structure of the house and permits, all that information, a lot of times will not be covered in the contract. So if you end up buying a home and you find out that 1 bedroom and 1 bathroom is unpermitted, and now the city is asking you to either knock it down or make it legal, then that could present a challenge. So those are just things that you kind of need to be aware of. And obviously the thing that we could recommend is contacting your local HUD-approved counseling agency, and they could walk you through all that. Where to find, check local ordinances for what is or is not permitted. Good question. Like you said, local ordinances. So depending if you're purchasing in the unincorporated area of the county, that would be public works, regional planning. And then if you're in the incorporated areas, for instance, like the city of Los Angeles, then the city has its own regional planning. So it's always best that you go to your local agencies and check what's already on file. Anything else, you could always go back to them and ask. It's not going to be an issue if you do that. A lot of times there's these property profile reports that are available through some of these agencies, and you could download that. And I know for the city of Los Angeles, they have a pretty sophisticated system where they have most of the building permits available online, and they could give you more information. So if you live in the unincorporated area, it's the Public Works Department, the Regional Planning Department. But you should also check Public Works to see what permits are there. And then also the city of Los Angeles has their own regional planning and Public Works where they issue permits. Let's see, what special things should you look out for if you want to buy a condo? Good question. Condominiums, I'll just talk about it really quick. In addition to condominiums, so it's basically most of the stuff we covered, but there's things to consider, which is an homeowners association. And along with that, you're going to get what's called CCNR, so covenant conditions and restrictions. So that's basically a binding agreement between the home buyer and the association on certain rules that this community is going to have regarding certain things. And it could cover anything from who's responsible for certain repairs, who's responsible for the common areas. And then it's also going to talk about the assessments and monthly dues and what it covers. So it's a little more tricky with condos, and it also would apply to townhomes that have an association. But Rosie, if there's anything else that you want to mention when it comes to townhomes or condominiums, things to consider, I think the first thing, the next thing I could suggest is to consider the cost of the dues, the monthly dues. So in some cases, it could go up to a few $100s if they have a situation where the city is asking the association to do, for instance, an earthquake retrofit, and the association doesn't have the money for that. Then there's a situation where they could get into what's called a special assessment or even an emergency assessment. And that's basically going to pass on the cost of that retrofit to the homeowners. So that's a couple things you may want to consider. You cannot get out of that. So if it's something that's introduced by the board and it's put up to vote for the homeowners, there will most likely be it most likely will pass, because if it's an ordinance or retrofit that's being required by the city, then it's going to have to be done to comply with that. So, Rosie, do you have any other suggestions or comments about condominiums or townhomes?
No, I think you covered it. One of the most important factors is obviously cost, because as you mentioned, it's not a fixed cost. So if you go into a condo with a 350 HOA, it doesn't mean it's going to stay a 350 HOA.
Right.
However, given the circumstances right now, it's probably one of the more affordable options as opposed to single family home ownership. Just because of some of the, I'm so sorry, Clement, if you covered this. For example, your homeowner's insurance is probably going to be a little bit less because of the HO6 that's already covered, because of some of the associations cover the outside of the unit. You're just responsible for the inside. So there's some pros and cons with condos. It just really just depends on what you can afford.
Right. Okay. So we do have another question here. And this question came from Sharon, and she's asking if you need to do a home inspection for a condo. Yes, I mean, we advise that you do a home inspection for any home that you're buying, whether it be a single family dwelling or a condominium or a townhome. Obviously, you want to have some sort of professional do an inspection of the property to at least make you aware of certain issues they may come across. So again, we do recommend that you do inspections. In the report, if there's issues that are highlighted in the report, again, those are things that you may be able to negotiate during the buying process with the seller. Most of the times, and also depending on the loan you have, again, you may have like an FHA loan that's going to require certain repairs to be done. I'm sorry. But if not, then it's something that can be negotiated, and it's common to see where the seller will give the buyer some sort of credit for repairs. So. I think I saw another question here. Must be maybe a question for Rosie. So Lorraine asked if mobile homes are included in the LIPA or HOP programs.
Great question. No, they're not. It has to be. Can you hear me, guys? Yeah.
Yes, yes.
Okay, great. Sorry. No, they are not covered. As a matter of fact, mobile homes typically have their own financing. And what I've seen in my experience is that it typically has a higher rate or down payment requirement than your standard conventional FHA financing for a single family home. So to answer your question, no, it's not covered by LIPA or HOP. Additionally, you should know that if you are interested in a mobile home, the land lease is not a fixed cost. So that land lease, meaning that you own the actual like home, right, but you don't own the land that it's sitting on, that expense can increase over time because you're basically renting the land. So something that you have to consider if you are thinking about buying a mobile home.
Okay. And the last question that we'll take for today, what is the big difference between joint tenants or joint tenancy and community property in regards to title deed? Okay. So I could take a shot at this. Generally, you're going to see the term community property when it's a husband and wife that's purchasing property in California, since California is considered a community property state. And the biggest, well, it's not even a difference because you also have the same with joint tenancy. But with this type of situation, you're going to have what's called the right of survivorship. So when you buy a piece of property with another person and it's done as a joint tenancy, or in this case also in community property, what happens with the right of survivorship means is that if one of the owners passes away, then the other person on title becomes the sole owner of the property, right? So that's where this right of survivorship comes into play. It's common to see deeds where they name a husband and wife as joint tenants. And then you also see a deed where it's a husband and wife as community properties. Essentially, it's the same because, again, it's the right of survivorship that's important here. But can they hold title as joint tenants? Yes. But then other individuals who are not married could also hold joint tenancy. So it's common to see maybe a parent and a child hold property in joint tenancy, or you could see siblings or just friends hold property as joint tenancy. But I think the biggest thing here is going to be that right of survivorship. Is there anything that either Rosie or Lady wants to add to that?
No, sir, you covered it pretty well.
Okay. Okay, and then there's a comment here from our host, our program director, that if we miss any questions, again, the presentation and the slides will be available on our website. So if you visit dcba.lacounty.gov's /foreclosure-prevention, then you can find this presentation and other presentations that we've done in the past. Okay, so thank you, Rosie and Letty, for the presentation. So what we learned is that home buying is still possible during the pandemic, and with a well thought out plan and guidance from trusted advisors, you too can achieve home ownership. If you or someone you know is thinking about buying a home, please remember that HUD-approved counseling agencies like New Economics for Women is here to help, or you could contact the DCBA and we could refer you to a HUD-approved counseling agency near you. Thank you and have a good evening.